Welcome to the Roy Morgan Weekly Update. I'm Julian McCran, the manager of the Roy Morgan poll, stepping in today for Roy Morgan CEO Michelle Levine, who is unavailable to deliver the weekly update. All eyes have been on today's Reserve Bank meeting, at which the bank delivered a shock. They left interest rates on hold at 3.85%. In the lead up to today's decision, consumers have clearly been expecting a cut, with consumer confidence increasing for a third straight week. The bank's decision to leave interest rates unchanged will be a shock to many going forward. The latest ANZ Roy Morgan consumer confidence, based on interviews conducted throughout last week before the Reserve Bank meeting, it increased 1.4 points to 88.6. Although net buying sentiment fell back this week after the mid-year sales ended, there were positive moves in relation to personal finances and expectations for the Australian economy, which improved and led the overall index up. However, today's decision by the Reserve Bank to leave interest rates unchanged is likely to be a significant negative to next week's consumer confidence reading, as the bank waits to see the latest inflation data later this month for the June quarter. There was concerning news on the inflation front this week before the Reserve Bank meeting, with ANZ Roy Morgan inflation expectations increasing 0.3% to 5%. Australians' expectations of inflation are now substantially higher than the official ABS figure, which shows annual inflation at only 2.1%. Australians now expect inflation of 5% over each of the next 2 years, a figure just above the long-term average of 4.8% for this measure over the last 15 years. Concerningly, the biggest increase was for people paying off their homes. Their inflation expectations jumped 0.9 percentage points to 5.2%. Now, just behind the inflation expectations of renters on 5.3%, homeowners have the lowest inflation expectations of 4.5%. And now, how are businesses feeling? Australian business confidence for the month of June increased by 2.8 points to 102.4, just above the neutral level of 100. The increase to business confidence came after the Albanese government's decisive re-election victory in May and after the Reserve Bank decided to cut interest rates later in the month. And of course, these interviews were conducted before the Reserve Bank's decision today. This Roy Morgan Business Confidence series is based on interviews with 1,500 businesses each month to gauge their views on their company's prospects, as well as their assessment of the broader Australian economy. Now, driving business confidence higher in June was more confidence about the year ahead. Now, 39.6% of businesses, an increase of 7.3 percentage points on a month ago, expect to be better off financially this time next year. Only 21.7% expect to be worse off, and that's a net positive of around 18 percentage points on that key question. In addition, now a rising majority of 59.2% of businesses expect good times for the Australian economy over the next 12 months, while only 36.7% expect bad times, a net positive result of over 20 percentage points. These are the two questions which provided a boost to business confidence in June. Now, looking over the 2 months of May and June, the most confident industries were public administration and safety, which recorded a business confidence of 130.9, and accommodation and food services on 128.6. Following those two, we have electricity, gas, water and waste services on 116, and rental, hiring and real estate services on 110, all well above the national average. At the other end of the scale, we once again have the agriculture, forestry and fishing industry with a business confidence of only 63, well below any other industry. And now to some important Roy Morgan data looking at long-term smoking trends in Australians over the decade to June 2025. The latest data from Roy Morgan shows that 17.4% of Australians aged 18 plus smoke or vape, including 12.1% smoking factory-made cigarettes, which are FMCs, or roll your own cigarettes, RYOs, and 7.5% vape. Overall, this is virtually unchanged over the last decade. In 2014, 17.7% of Australians smoked either FMCs, RYOs, pipes or cigars. However, since 2014, the composition of smoking or vaping has changed. with both vaping and illicit tobacco more widespread. Today, 7.5% vape and 4.8% report using illicit tobacco. Smoking illicit tobacco is clearly contributing to the continued overall smoking rate, now hovering just over 12%. For more detail, head over to the Roy Morgan website for an in-depth look at smoking and vaping rates in Australia over the last decade. And finally today, a look at superannuation satisfaction. In recent months, overall satisfaction with the financial performance of super funds has increased to 69.9%, an increase of 3.1 percentage points from a year ago and up 4.9 percentage points from the post-pandemic low reached in July 2023 of 65%. Satisfaction with super funds is now over 10 percentage points higher than the long-run average of 59% since 2007. And a look across the different types of super funds shows increases across all four over the last year, and they're all now at multi-year highs. The standout over the last 12 months are retail funds. Customer satisfaction in retail funds has increased 6.4 percentage points over the last year to 69.3%, a record high satisfaction result for retail funds, and now just behind industry funds on 69.5%, and that's up 2 percentage points from a year ago. Self-managed funds have the highest customer satisfaction at 77.7%, just ahead of public sector funds at 75%, but neither has improved that much compared to a year ago. And that's a wrap. Thanks for your interest in Roy Morgan's latest results. For more detail on the topics covered in this video, head over to the Roy Morgan website. Roy Morgan CEO Michelle Levine will be back next week to bring you the latest results for consumer confidence, inflation expectations, and the unemployment data for June. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights.